This is the reason why you should learn and use only one strategy when you're going to trade Forex, or when you are going to learn how to trade Forex. To easily become profitable, you should use only one strategy. Do not change. Do you know why? In case you don't know why, more explanation is being explained in this video. Watch this video from the beginning to the end to know the reason why you should stick in one trading strategy. In case you're brand new here, you are highly welcome. This is a platform where we learn how to trade Forex. In this video, we shall really learn a lot. So let us dive in and see the reason why you should learn and stick in one trading strategy. There's a say in Forex trading that says that consistency builds mastery. In case you keep switching from one strategy to another, you will truly never master any. There are so many trading strategies to trade, but of all the many, you should only learn one. If you keep changing from strategies to strategies, you will never master any. You will just be there in the market confused and making losses after losses. Your meta quote will just be showing you red figures. By sticking to one strategy, you will understand its strength and its weakness and how it behaves in different market conditions, and this will surely improve your profitability. Number two, if you have one trading strategy, it will remove confusion and overthinking. When you're facing the charts, you'll always be confused at some market condition. Don't forget to subscribe, like, and also share. Thank you. When you have many strategies, you will doubt whether the price will go bullish or bearish, because you are trying to bring the other strategy and also you're trying to bring this strategy. You'll find that your head is bursting, smoking. One strategy equals to clear rules, and also it is equal to fewer emotional mistakes. Number three, better performance tracking. In case you want to track how you are performing, because this is done by keeping journals, that helps you to know how you are performing. If you are consistently changing your strategies or using many strategies in the market, you are not able to measure what works and what doesn't work. If you have made a win, you will not be able to know that it is ICT that gave me this win. And also, in case you are able to make the loss, you may not be able to know that it is the trend line that gave me this loss. With one strategy, you will be able to analyze results, tweak small parts, and then you grow steadily. Number four, you will be able to boost your confidence. When you have one strategy, you are going to be so confident in your strategy. You can only look into chart and immediately know where the price will go to. Every win reinforces your trust in your system. Confidence makes it easier to hold trade and avoid panic decisions. Number five, prevent strategy hopping. Okay, hopping from strategy to strategy, it is not advisable in Forex trading. Many beginners always lose money in Forex trading because they hop strategies, chasing the holy grail. They think that if they have a lot of strategy, then they are going to destroy the market. The truth is that no strategy is perfect in the market. Success in Forex trading comes from discipline plus risk management with one proven approach. It is not about having 10 strategies. It is about having one simple tested strategy that you mastered, trust, and apply with discipline. That is just simply how consistent traders are made. Today in the morning, I took some trades using two strategies, and one of the trade was profitable. The other trade went into a loss. We are going in the chart to see the disadvantages of having many strategies. So I took that trade for educational purpose. Let us go there. I took GBPUSD. Let us look at that. Here I was trading the trend line. You can see that I've drawn my trend line here, and the trend line has several touches all the way from top up to the bottom here before the price collapsed drastically. I looked for an order block in this part, and I also marked it, giving me an area where the price may be able to react from, which is here. So this order block here came up to this order block. I anticipated that the price will come all the way from down up to this area and then bounces. That's then why I was able to sell. But before I sold, my confirmation was that when the price is here and it comes and then breaks this trend line that I've drawn, like the way it broke here, and then I'll be able to enter. So here the price came and broke. I entered, but it kept playing around here, but it didn't kick me out simply because I didn't put my stop loss. And then it eventually came and moved on my direction. So my anticipation was, if the price moves against me and breaks out this trend line here, okay, I would be able to enter from the candle that has closed above this line, like as in break, close, makes a retest, and then therefore I enter. And let us go to the other pair. In this pair GBP I used a different strategy. In this strategy we can do top down analysis, and we see on a higher time frame what the market was doing. Here the market is making swing high, swing low, swing high, swing low, or higher high, higher low, just pushing uptrend. Yeah, that is in 4 hour, and then in 1 hour it's still forming uptrend. If we draw our trend line, you can really see that it is true. Yeah, the trend line is actually facing up. This is the simple way how we can draw a trend line. You can also draw it like this. It has 2 touches, that is in 1 hour. So on 30 minutes we can really see here, this was my area of interest here, this part here. Yeah, so I was like, if this price moves all the way to here, it will be able to reverse just as it did here. Okay, it was able to reverse. It will also go here and reverse, or comes here and reverse. And then on 15 minutes we can see that it is much more clear. My first anticipation was wrong, but the second anticipation was correct. Here I was not using the trend line, I was using a different strategy. I don't know how I can call it. Is it mitigation? Since the price made an order block here, it would come and respect it from this side here. And also since the price made this, it will also respect it here and also respect it here. but unfortunately it didn't. Then on 5 minutes we can see really what the price did. Yeah, it came up to this level. Okay, it came mitigated from here. It first moved down a little bit and then it reversed and consolidated around it. After consolidating it, then broke it. So meaning that in this level here, the buyers and the sellers were in conflicts. There were no decision made. But then after this red candlestick, this bearish candlestick, the decision was made from here, and then the buyers were more active than the sellers, and then they pushed the price up, and then from there the sellers took over. Yeah, so you'd see that when you're busy switching from strategy to strategy like this, you can become more confused. In this strategy, I was much more confused compared to the trendline strategy that I was trading on, because the trendline is much more easier and you can easily predict the direction of the price after doing a clean analysis, and it's much more correct and easier than this particular strategy whereby the price comes and mitigates certain area and then respects it as well, and then it reverses. I will be able to see you in the next video. Bye.